Tony Robbins is one of the most influential life and financial strategists in the world. He is not just an author, he is a teacher of human potential. For more than 4 decades, Tony has coached world leaders, entrepreneurs, and everyday people to transform their lives from scarcity to abundance. From presidents to professional athletes, from business giants to people drowning in debt, his message has been the same. You already have the power. You just need the right strategy. Tony grew up in poverty. He had no financial education. There were days when his family could not even afford food. But that hunger, both physical and emotional, pushed him to study what makes people succeed. He devoted his life to learning from the greatest minds in psychology, business, and investing. Mentors like John Templeton, Ray Dalio, and Warren Buffett shaped his thinking. They taught him that wealth is not luck. It is a mindset built on rules and discipline. Over time, Tony realized that money alone does not create happiness. True wealth is the ability to live without fear, to be unshakable no matter what happens in the economy or the markets. And that became the foundation of this book, Unshakeable. This book is not written for Wall Street insiders. It is written for you, the ordinary investor who wants to live with financial freedom and peace of mind. Tony simplifies the complex world of investing into clear steps that anyone can follow. He helps you see through the noise, avoid costly mistakes, and build confidence in every financial decision. As you move into the first part of this book, Wealth, the Rulebook, you will learn the timeless principles that create lasting security. You will discover how small actions, when done consistently, can compound into massive wealth over time. You will also see how hidden fees and emotional traps silently eat away at your future. So take a deep breath. Set aside your fears about money. Because the journey you are about to begin is not just about growing your bank account. It is about becoming unshakable in your mind, your emotions, and your financial life. Chapter 1. Unshakeable. The word unshakable means more than just being rich. It means reaching a state of mind where no economic crisis, market crash, or bad news can break your inner peace. It is about emotional mastery as much as financial mastery. Tony Robbins begins this journey by teaching that the ultimate goal is not money. The goal is freedom. Freedom from fear. Freedom from worry. Freedom to live life on your own terms. Most people live in constant anxiety about money. They check the market every day, panic when prices fall, and celebrate when they rise. But Tony reminds us that the greatest investors in history do not live like that. They stay calm when others are scared. They make decisions based on principles, not emotions. That is what makes them unshakable. Tony explains that fear is the enemy of wealth. Whenever the market drops, fear spreads faster than logic. People sell their investments in panic and lock in their losses. The smart investors, however, stay focused. They understand that downturns are temporary, but discipline lasts forever. This emotional strength is what separates the successful from the struggling. To be unshakable, Tony says, you must understand the truth about the financial world. The markets will rise and fall. Crashes will come and go. No one can predict when. But what you can control is how you respond. You can choose patience over panic, strategy over emotion, wisdom over fear. He also emphasizes the power of having a clear plan. Without a plan, people drift with every headline. They chase trends, follow rumors, and lose sight of their goals. But with a well-built strategy, you gain confidence. You know what to do whether the market goes up or down. You become unshakable because you are guided by clarity, not chaos. Tony compares the financial world to the ocean. You cannot control the waves, but you can learn how to surf. You cannot stop the storms, but you can build a stronger boat. Your mindset is that boat. Your knowledge and discipline are the sails that keep you moving forward. He shares that the most successful investors, like Warren Buffett and Jack Bogle, never panic during market crashes. They see them as opportunities to buy when prices are low. They know that fear creates temporary discounts on long-term value. They stay calm when everyone else is losing control. And that calmness is the real wealth. Tony wants every reader to reach that same emotional stability, to know that you can stay peaceful even when the world is uncertain. When you reach that level, you no longer react out of fear. You act with confidence, logic, and long-term vision. That is the essence of being unshakable. He also introduces a key idea. You do not need to predict the future to succeed. You only need to prepare for it. This means creating a plan that works in every condition, whether the market rises, falls, or stays flat. Preparation replaces fear with faith. It gives you the courage to face any financial storm. Tony ends this chapter by reminding you that the goal is not to become a perfect investor overnight. The goal is progress. To learn a little more each day. To take small, smart actions that lead to big results over time. If you can stay calm during chaos, keep learning, and stay consistent, you are already ahead of most people. Being unshakable is not about controlling the market. It is about mastering yourself. Once you control your emotions, your habits, and your reactions, no external event can destroy your peace. That is when you truly become unshakable. Chapter 2. The Power of Compounding. After learning how to stay emotionally unshakable, Tony Robbins moves to the secret weapon of wealth. It is not luck, intelligence, or even timing. It is the quiet, invisible force called compounding. Albert Einstein once called compounding the eighth wonder of the world. And Tony agrees completely. Compounding means your money earns more money. Then that new money earns more again. Over time, it grows like a snowball rolling down a mountain. At first, the growth seems small, but as years pass, the snowball becomes massive. That is how ordinary people become financially free. Tony explains that time is the most powerful ally of compounding. The earlier you start investing, the greater your results. For example, if you begin investing in your 20s, even small amounts can turn into a fortune later in life. But if you wait until your 40s, you lose the magic of time. Compounding works best when patience meets discipline. He reminds us that the biggest mistake people make is chasing quick returns. They jump from one stock to another, trying to get rich fast. But wealth does not come from speed. It comes from consistency. Every dollar you invest should be treated like a worker that never sleeps. If you keep reinvesting the earnings, your army of dollars multiplies year after year. Tony also teaches that compounding is not only about money. It applies to knowledge, habits, and health too. When you read a little every day, learn something new, or build better habits, those small improvements multiply. The same principle that grows your wealth can also grow your wisdom. Compounding rewards those who stay steady and punish those who quit early. To show how powerful it is, Tony shares a simple idea. Imagine you double a single penny every day for a month. By the end, it grows into millions. Most people cannot believe it because the first few days look unimpressive. But that is how compounding works. It looks slow, then suddenly unstoppable. He urges you to let time work for you instead of against you. Many investors lose years by waiting for the right time to start. But the truth is, the best time to begin was yesterday. The second best time is today. Because every day you delay, you are losing potential growth that could have compounded in your favor. Tony connects compounding directly to emotional strength. To let compounding work, you must stay calm during ups and downs. When fear takes over, people withdraw their money, break the cycle, and destroy years of progress. Being unshakable allows you to stay invested and let time do its job. He also warns about something dangerous that silently eats away at compounding: fees and costs. Even a small percentage taken away every year can destroy the miracle of growth. Over decades, these hidden charges can reduce your total wealth by hundreds of thousands. That is why understanding fees is the next step to true financial mastery. Tony ends this chapter by saying that compounding is like planting a tree. At first, you see nothing but soil. Then a small stem appears. Years later, it becomes a mighty tree, giving shade, fruit, and strength. Your investments grow the same way, slowly, silently, and surely. All you need is patience and discipline. As we move into the next chapter, Hidden Fees and Half-Truths, Tony reveals the traps that stop your tree from growing. He exposes how financial institutions quietly take a share of your compounding power. If the last chapter taught you how to grow wealth, the next one will teach you how to protect it. Because building financial freedom is not just about making money. It is also about keeping what you earn. Chapter 3: Hidden Fees and Half-Truths. In the previous chapter, Tony Robbins revealed how compounding can turn small amounts into massive wealth over time. But now, he uncovers a harsh truth that most people never see. While your money is growing, someone else might be quietly taking a piece of it. These silent thieves are hidden fees and half-truths told by the financial industry. Tony explains that millions of people trust financial advisors without realizing that many of them are not truly independent. Some advisors earn commissions for selling specific products, which means their advice may serve their company more than their clients. This is one of the half-truths of the financial world. They tell you they are helping you grow your wealth, but in reality, they might be helping themselves first. Fees come in many forms. Some are easy to see, like management charges. But most are buried deep inside paperwork, where ordinary investors never look. Even a small annual fee can eat away a huge portion of your future wealth. Tony gives an example. A 2% fee may sound small, but over decades it can cut your total earnings by almost half. That is how compounding turns against you. Instead of your money working for you, it starts working for someone else. Tony urges readers to ask one powerful question whenever they invest. What am I really paying for? Transparency is key to financial freedom. You must know where every dollar is going. The market itself is unpredictable, but your costs should never be a mystery. When you understand fees, you gain back control. He also talks about mutual funds, which many people believe are safe and smart investments. But inside many of these funds, the truth is less comforting. They often underperform the market while charging higher fees. In contrast, low-cost index funds and exchange-traded funds usually outperform most active managers in the long run. Tony encourages investors to choose simplicity and transparency over complex products filled with hidden costs. Another danger is emotional selling. Financial institutions use fear and greed to manipulate investors. When the market falls, they promote safe funds with higher fees. When the market rises, they sell hot funds that promise big returns. In both cases, they earn money while you take the risk. This cycle keeps average investors trapped and confused. Tony reminds us that being unshakable means not falling for these traps. You must educate yourself enough to recognize when someone is selling you hope instead of truth. He emphasizes that there are honest, fiduciary advisors who truly work for their clients. The key is to find those who are legally bound to put your interests first. An unshakable investor does not hand over control blindly. They partner with advisors who teach, not manipulate. He also connects this chapter to emotional discipline. When you know the real costs and the real rules, fear loses its power. You stop reacting to short-term noise because you understand the game. Knowledge becomes your defense, and the clearer you see, the more confident you become. Tony closes this chapter by saying that hidden fees are like termites in a wooden house. You may not see them at first, but they slowly weaken your foundation. To protect your financial home, you must inspect it regularly. You must remove what does not serve your goals. This awareness leads directly into the next chapter, rescuing our retirement plans. Because once you understand how much money is being quietly taken from you, the next logical step is to fix it. Millions of people have their life savings trapped in high-fee retirement accounts. Tony's next lesson shows you how to take back control of that money. He reveals how to protect your retirement from hidden costs, poor advice, and unnecessary risks. If you want to keep your compounding power alive, this next chapter is where your rescue mission begins. Chapter 4: Rescuing Our Retirement Plans. After understanding how hidden fees and half-truths quietly erode your wealth, Tony Robbins now shifts focus to one of the most critical areas of financial life: retirement. Millions of people spend decades working, saving, and hoping their nest egg will be enough. Yet many are unknowingly building their future on weak foundations. Tony calls this financial complacency, believing that contributing to a retirement account is enough without truly understanding where your money is going. He explains that retirement accounts like 401k plans, IRAs, and pension funds are powerful tools, but only if used wisely. Many people assume their advisors are guiding them correctly, but as we saw in the previous chapter, hidden fees, poor fund selection, and lack of strategy can quietly drain decades of compounding growth. The first step in rescuing your retirement is awareness. You must know exactly how much you are contributing, what you are paying in fees, and what you are actually earning. Tony emphasizes the importance of asset allocation, the way your investments are spread across stocks, bonds, and other assets. Most people either take too much risk or too little. Those who are too aggressive panic during downturns. Those who are too conservative never grow enough to beat inflation. An unshakable investor finds the right balance for their goals and risk tolerance. It is not about predicting the market. It is about creating a portfolio that can survive storms and still grow over time. He also discusses diversification, the principle of not putting all your eggs in one basket. By spreading your investments across different sectors, regions, and asset classes, you reduce the chance of catastrophic losses. Even if one investment fails, others continue to grow. This is the foundation of safety and long-term growth. Tony warns about the danger of timing the market. Many investors try to jump in and out to beat the system. They sell during corrections and buy during rallies, often at the worst possible times. History shows that time in the market matters far more than timing the market. Being patient and consistent is the unshakable strategy. He also introduces the idea of taking control of your retirement. Do not blindly trust employers or advisors to make all decisions. Review your statements, question your options, and educate yourself about the products you hold. Even a few small changes, reducing fees, rebalancing your portfolio, or choosing a more tax-efficient fund, can make a dramatic difference over decades. Tony shares stories of people who took action late in life and still transformed their retirement. By understanding fees, diversifying intelligently, and focusing on long-term growth, they reclaimed decades of lost opportunity. The lesson is clear. It is never too late to rescue your future, but action is required now. Finally, he connects this chapter to emotional mastery. Many people delay action because they feel overwhelmed or afraid. Fear of making the wrong decision can trap them in inaction. Being unshakable means facing these fears, learning the rules, and taking steps forward. Even small, consistent actions compounded over time can secure your retirement and create peace of mind. This chapter naturally leads into the next part of the book, the Unshakeable Playbook. Now that you understand the foundation of wealth, the dangers of hidden costs, and the importance of protecting your retirement, Tony is ready to address the myths that hold most investors back. In the following chapters, you will learn how to think like the world's greatest investors, avoid common mistakes, and create a strategy that makes you truly unshakable in every market condition. Part 2. The Unshakeable Playbook. Now that we have explored the rules of wealth, the power of compounding, and how to protect your retirement, Tony Robbins introduces the next stage of your financial journey, the Unshakeable Playbook. This part is designed to give you practical strategies that separate ordinary investors from the unshakable ones. Tony explains that most investors are held back not by a lack of money, but by a lack of understanding. They believe myths about the market, react emotionally to every headline, and let fear or greed control their decisions. The Unshakeable Playbook is meant to shatter these myths. It shows you how to think clearly, act confidently, and take advantage of opportunities when others panic. This section is not about theory. It is about actionable wisdom. It teaches you how to navigate volatility, how to recognize true value, and how to stay calm when the market tries to scare you. Tony draws lessons from the world's greatest investors, people who have survived crashes, booms, and recessions while consistently growing their wealth. He shows that by following simple principles, anyone can achieve the same results. He also emphasizes the role of mindset. The unshakable investor is not someone who predicts the market. They are someone who prepares for every scenario. They understand that risk is not something to avoid entirely, but something to manage intelligently. This mindset transforms fear into clarity and panic into opportunity. By the end of this part, you will see that many of the fears holding you back are based on misconceptions. The market is not a gamble. It is not rigged against you. You do not need to constantly jump in and out to succeed. You can play it smart, stay disciplined, and win over the long term. As we move into the next chapter, Myth 1. The market is too risky. Tony begins dismantling the most common fears about investing. You will discover why risk is often misunderstood, how to evaluate it correctly, and why embracing calculated risk is essential to building lasting wealth. This chapter sets the stage for a mindset shift that will allow you to invest confidently, no matter what the market does. Chapter 5. Myth 1. The market is too risky. Many people believe that the stock market is dangerous. They see headlines about crashes, recessions, and sudden losses, and think investing is too risky for ordinary people. Tony Robbins calls this the first major myth that holds investors back. The truth is, risk is not what most people think it is. Risk is often misunderstood and mismanaged, not inherent in the market itself. Tony explains that risk is about losing money you cannot afford to lose or making decisions without a clear plan. It is not about volatility or short-term drops. The market goes up and down every day. That is normal. Historical data shows that despite crashes and corrections, the market has always recovered over the long term. Those who panic and sell during downturns lock in losses, while patient investors benefit from recovery. He introduces the idea of differentiating between short-term noise and long-term trends. Stock prices fluctuate daily, but businesses grow slowly over years. By focusing on the fundamentals, strong companies, sound balance sheets, and consistent earnings, you reduce the risk dramatically. Volatility is not the enemy. Ignorance is. Tony also discusses the concept of asymmetric risk. This means making investments where potential gains far outweigh potential losses. He shows that when you evaluate investments intelligently, risk becomes manageable and even an opportunity. The unshakable investor does not avoid risk entirely. They embrace calculated risk while protecting their capital. Another key point he makes is the importance of diversification. Putting your money in a variety of assets, sectors, and regions reduces the impact of any single failure. Even if one investment suffers, others continue to grow. Diversification is your shield against the illusion of risk. It turns fear into strategy. Tony also warns against emotional investing. Fear and greed are the main drivers of mistakes. People sell when they should buy and buy when they should wait. By learning to stay calm, unshakable investors can take advantage of downturns rather than be hurt by them. He shares examples from history, the 2008 financial crisis and other market crashes, showing that disciplined investors who stayed invested ultimately prospered. He emphasizes preparation. Risk is not about predicting the future. It is about preparing for it. A well-structured portfolio, clear financial goals, and an understanding of your personal risk tolerance allow you to face volatility without panic. When you are prepared, fear loses its power. Finally, Tony introduces a mindset shift. Stop thinking of the market as dangerous. Start thinking of it as a tool for growth. Risk becomes manageable when you know what you own, why you own it, and how it fits into your long-term plan. The unshakable investor sees opportunity where others see danger. This chapter naturally leads into the next. Myth 2. The market is rigged against you. Once you understand that risk is not as scary as it seems, the next challenge is breaking free from the belief that the system is working against you. Tony shows how most perceived unfairness is actually a misunderstanding, and how you can position yourself to thrive within the market, not be victimized by it. Chapter 6. Myth 2. The market is rigged against you. Many people believe that the financial system is designed to benefit the rich and powerful while leaving ordinary investors helpless. Tony Robbins calls this the second myth that traps people in fear. He explains that this belief is only partially true. Yes, some institutions take advantage of ignorance. Yes, the system has rules that favor knowledge and preparation. But the market itself is not inherently rigged against you. Tony emphasizes the importance of understanding how the market really works. It is a network of businesses, investors, and institutions, all operating with different goals and strategies. While some players may have more resources, the market rewards preparation, discipline, and long-term thinking. Even ordinary investors can thrive if they understand the rules and avoid emotional mistakes. He shares that one of the main reasons people feel the system is unfair is lack of education. They trust advisors blindly, invest in high-fee products, or react to every market headline. When their results are disappointing, it feels as though the market is against them. But in reality, it is a lack of knowledge and planning that costs them money. Tony introduces the concept of fiduciary responsibility. Some advisors are legally required to act in your best interest. By seeking guidance from fiduciaries, you gain access to fair advice and transparent strategies. This simple choice drastically changes your experience in the market. The truth is that being informed and cautious turns the playing field in your favor. He also addresses the illusion of insider advantage. People believe that professional investors or hedge funds have secret tools or tricks that guarantee success. While they have resources, they are not immune to losses. Even the most sophisticated investors fail during crises. The difference is that they are prepared, disciplined, and focused on long-term outcomes, not short-term gains. This mindset is accessible to anyone willing to learn. Tony stresses the importance of understanding fees, taxes, and the mechanics of investing. These are the real areas where the system can take advantage of you if you are not careful. By minimizing costs, choosing tax-efficient strategies, and staying disciplined, you level the playing field. The market does not need to be rigged if you know how to protect yourself. He also highlights the power of long-term investing. The system favors those who understand patience. Quick wins are rare, but steady, consistent growth rewards every investor over time. Tony uses examples of index funds and low-cost ETFs to show how ordinary people can outperform most active investors simply by staying disciplined. Finally, Tony addresses mindset. Believing the market is rigged creates fear and paralysis. It stops people from taking smart action and locks them in inaction. By replacing this myth with knowledge, preparation, and strategy, you gain control. You realize that the system is not an enemy. It is an opportunity for those willing to act wisely. This chapter sets the stage for the next one. Myth 3. The market is a casino. Once you see that the market is not rigged, the next step is to understand that investing is not gambling. Tony will show you how to separate luck from skill, speculation from strategy, and fear from logic. By understanding this, you can approach investing confidently and make the market work for you, not against you. Chapter 7. Myth 3. The market is a casino. Many people avoid investing because they believe the stock market is like a casino. They think it is pure luck. Spin the wheel, roll the dice, and hope for the best. Tony Robbins calls this the third myth that keeps people from building real wealth. The truth is, the market is not a game of chance. It is a system of ownership, strategy, and patience. He explains that when you buy a stock, you are not betting on a number or a card. You are buying a piece of a real business. That business produces products, earns revenue, pays employees, and grows over time. By owning a share, you participate in that growth. This is very different from gambling, where the odds are stacked against you from the start. Tony highlights the difference between investing and speculating. Investing is disciplined, informed, and long-term. Speculating is impulsive, emotional, and short-term. Casinos thrive on speculation because the house always wins. The market, when approached with knowledge and strategy, rewards investors instead of punishing them. He shares examples of legendary investors who treat the market like a business rather than a game. Warren Buffett does not buy stocks because he hopes the price will rise tomorrow. He studies companies, evaluates their value, and invests in those with durable competitive advantages. Jack Bogle focused on low-cost index funds, relying on the long-term growth of the overall market. Both demonstrate that intelligence and patience replace luck with probability. Tony also addresses emotional investing. Many retail investors behave like gamblers. They chase trends, buy during hype, and sell during fear. This behavior resembles betting in a casino, and it often destroys wealth. By contrast, the Unshakeable investor creates a clear plan, follows it consistently, and ignores short-term noise. This transforms market participation from gambling into strategic wealth building. Another key principle he introduces is asset allocation. Diversifying across stocks, bonds, and other assets reduces risk and stabilizes returns. Even if one sector underperforms, others can balance the portfolio. This is a far cry from putting all your chips on red or black. The system is no longer random when structured thoughtfully. Tony warns against overconfidence and speculation in volatile assets. Cryptocurrencies, penny stocks, and highly leveraged products can tempt investors with huge gains. But without strategy, they function like casino games. The lesson is to separate core investments from speculative bets. Keep your foundation strong, and any high-risk trades should be small and deliberate. He also emphasizes the power of time in turning volatility into opportunity. Market dips are natural. They are not punishment. They are often the best times to buy valuable companies at discounted prices. An unshakable investor sees opportunity where others see danger. Finally, Tony connects this chapter to the next myth. Myth 4. You have to be in and out to win. After understanding that investing is not gambling, it is important to address the misconception that constant trading and timing the market leads to success. Tony will show that true wealth is created by patience, discipline, and sticking to a well-designed strategy over the long term. This mindset separates the unshakable from the anxious and reactive investor. Chapter 8. Myth 4. You have to be in and out to win. Many investors believe that to succeed in the market, they must constantly jump in and out. They watch the news, track every headline, and try to time the perfect moment to buy or sell. Tony Robbins calls this the fourth myth that keeps people anxious, reactive, and often broke. The truth is that timing the market consistently is nearly impossible, even for the most experienced professionals. He explains that most people underestimate the power of staying invested. The market's best days often follow the worst days. Missing even a few of the strongest recovery days can drastically reduce long-term returns. History shows that those who stay patient and committed outperform those who try to predict every move. Tony emphasizes the importance of long-term thinking. Investing is not a sprint. It is a marathon. Daily fluctuations, headlines, and rumors create noise, not meaningful signals. By focusing on fundamentals, strong companies, diversified assets, and a disciplined strategy, you minimize emotional decisions. Staying invested allows your money to benefit from compounding, the true engine of wealth. He also introduces the concept of market cycles. Markets move in patterns of growth, decline, and recovery. Trying to jump in and out is like chasing waves without understanding the tide. Even professional traders often fail because they are trying to outguess forces beyond their control. In contrast, the unshakable investor rides the wave patiently, adjusting only when the fundamentals change. Tony shares examples from financial history. During major crashes, like the dot-com bubble or the 2008 financial crisis, long-term investors who stayed invested eventually recovered and grew their wealth. Those who panicked and sold often never regained their lost ground. The lesson is clear. Action without discipline destroys wealth. Patience with a plan builds it. He also talks about the psychological cost of frequent trading. Every buy and sell triggers emotion, fear, hope, or regret. These emotions lead to mistakes. Stress increases, sleep decreases, and confidence erodes. By staying invested and ignoring short-term noise, you protect not only your money, but your mental well-being. Another key point is the role of strategic adjustments. Being unshakable does not mean ignoring problems. It means making thoughtful, informed changes when necessary. Rebalancing your portfolio periodically, adjusting for life events, or responding to major economic shifts is part of disciplined investing. It is not reactive panic, it is proactive planning. Finally, Tony connects this chapter to the next myth. Myth 5. The best way is to play it safe. After understanding that constant trading does not create wealth, investors often swing to the opposite extreme. They avoid risk entirely. In the next chapter, Tony explains why playing it too safe can be just as dangerous as gambling. He shows how calculated risk, when combined with discipline and knowledge, is the true path to financial freedom. This balance between safety and opportunity is what makes an investor truly unshakable. Chapter 9. Myth 5. The best way is to play it safe. After learning that timing the market is not the key to wealth, many investors make the opposite mistake. They try to avoid all risk. Tony Robbins calls this the fifth myth, the belief that the safest approach is the best approach. In reality, playing it too safe can quietly destroy your financial future. Avoiding risk entirely often leads to minimal growth that cannot keep up with inflation. Over decades, this slowly erodes your purchasing power, leaving you unprepared for retirement or life goals. Tony explains that risk is not inherently bad. Risk becomes a problem only when it is unmanaged or misunderstood. All investments carry some degree of risk, even savings accounts. The key is to take calculated, informed risks while protecting your capital. This is how wealth is built over time. He introduces the idea of a safety net combined with opportunity. An unshakable investor does not avoid risk. They manage it intelligently. By diversifying assets, investing in low-cost funds, and balancing growth and security, you can embrace risk while limiting potential losses. This approach allows your money to grow steadily without exposing you to unnecessary danger. Tony also highlights the psychological trap of over-conservatism. Many people choose extremely safe investments because they fear loss. But this fear creates another problem: missed opportunity. Money that is too conservative does not grow fast enough to achieve your life goals. Inflation quietly erodes its value, leaving you behind even if you avoid market losses. He contrasts safety with security. Safety is avoiding all risk. Security is creating a foundation that can withstand volatility while still growing. Security combines diversification, proper planning, and understanding the rules of the market. This mindset allows you to sleep peacefully even during market downturns. Tony also emphasizes the importance of having a clear plan. Playing it safe without a plan is passive and ineffective. A thoughtful strategy allocates resources to both growth and protection. It ensures that your portfolio is resilient and positioned for long-term success. The unshakable investor focuses on what they can control, not what they cannot. He shares stories of investors who avoided risk entirely and discovered too late that their money could not sustain them in retirement. Conversely, those who took smart, calculated risks built wealth steadily while managing fear. The difference was not luck, but knowledge, discipline, and mindset. Finally, Tony connects this chapter to the next section, the psychology of wealth. After understanding the myths that block most investors, it is time to explore the inner game of money. The next chapters reveal how fear, gratitude, and mindset shape financial outcomes. Building wealth is not just about strategy and planning, it is about mastering your emotions, beliefs, and behaviors. To become truly unshakable, you must understand the psychology that drives your financial decisions. Part 3. The Psychology of Wealth. Up to this point, we have explored the rules of wealth, powerful strategies, and common myths that hold investors back. Now Tony Robbins shifts focus from external strategies to the internal game of money, the psychology of wealth. This part is about mastering your mind, emotions, and beliefs so you can make confident financial decisions without being controlled by fear or greed. Tony explains that even the best strategies fail if your mindset is weak. Emotions like fear, anxiety, and envy can sabotage your plans faster than any market crash. The unshakable investor is not just knowledgeable, they are emotionally disciplined. They think clearly, act calmly, and make decisions from a place of confidence and long-term vision. This section also emphasizes the power of gratitude and giving. Tony shows that wealth is not only about accumulating money. True financial freedom comes when you use your resources to create value for yourself and others. Generosity, gratitude, and purpose transform money from a source of stress into a tool for empowerment. In this part, you will learn how fear silently controls your decisions and how to overcome it. How to develop the mindset of long-term wealth, focusing on strategy and discipline rather than emotion. Why gratitude and giving are essential elements of true financial security. By mastering the psychology of wealth, you not only protect your money, you also protect your peace of mind. You create the internal resilience to stay calm during downturns, confident in your plan, and patient for long-term growth. As we move into the next chapter, The Real Enemy is Fear, Tony begins to reveal the psychological forces that prevent most people from achieving financial freedom. Fear is not just an obstacle in the market, it is a force that shapes every decision you make. Understanding it is the first step toward becoming truly unshakable. Chapter 10. The Real Enemy is Fear. Tony Robbins begins this part by revealing the hidden obstacle that blocks most people from building wealth: fear. Fear is not just an occasional feeling, it is a force that silently controls decisions, limits potential, and destroys opportunities. Even people with good knowledge, solid plans, and disciplined strategies can sabotage their future if fear dominates their thinking. He explains that fear comes in many forms: fear of loss, fear of making mistakes, fear of market crashes, fear of failure, and fear of uncertainty. These fears are natural, but they are amplified by lack of knowledge, exposure to negative news, and social pressures. When fear takes control, people make poor decisions. They sell during market drops, avoid calculated risks, or postpone investing altogether. The result is often stagnation, lost opportunity, and unnecessary stress. Tony stresses that fear is a learned response, not an unavoidable fact. By understanding how it operates, you can weaken its influence. The first step is awareness, recognizing when fear is guiding your decisions. Many people think they are acting rationally, but they are responding emotionally. Awareness allows you to pause, think, and choose actions based on logic, not instinct. He introduces a powerful technique to manage fear: reframing. Instead of seeing market downturns as disasters, view them as opportunities. Instead of fearing loss, focus on potential gain. By changing the meaning you attach to events, you reduce the power of fear. Your emotional reaction shifts from panic to calm, from hesitation to confidence. Tony also highlights the importance of preparation in reducing fear. Knowledge and planning are the antidotes to anxiety. When you have a clear strategy, understand your investments, and know your risk tolerance, uncertainty no longer paralyzes you. Fear loses its grip because you know exactly what actions to take in any situation. Another key point is controlling the stories you tell yourself. Many people repeat myths like, "The market is too risky," or "I will never recover from a loss." These internal narratives amplify fear. Tony encourages replacing limiting stories with empowering beliefs. I am prepared, I act with discipline, and I stay calm in volatility. Your beliefs shape your behavior, and your behavior determines your results. He also discusses the role of fear in retirement planning. Many postpone investing or contribute too little because they are afraid of market swings or making mistakes. This fear costs more than any market drop ever could. By facing fear directly, taking calculated steps, and focusing on long-term growth, you protect your future instead of jeopardizing it. Finally, Tony connects fear to action. Being unshakable does not mean eliminating fear entirely. It means acting despite it. When you acknowledge fear, understand it, and plan around it, you make better decisions and stay committed to your goals. This mastery over fear sets the stage for the next chapter, the mindset of true wealth. Once you confront fear, you can shift your focus to building a mindset that attracts opportunity, confidence, and lasting financial freedom. Fear no longer controls your decisions. Your principles and strategy do. Chapter 11. The Mindset of True Wealth. After confronting fear, Tony Robbins focuses on the mindset required to achieve real and lasting wealth. He explains that true wealth is not about how much money you have in your account, the size of your house, or the luxury of your lifestyle. It is about freedom, security, and the ability to live life on your own terms. Wealth is a state of mind, as much as it is a balance sheet. Tony emphasizes that the unshakable investor develops a mindset that combines confidence, patience, and discipline. They understand that financial markets are unpredictable and that losses are part of the journey. Rather than panic, they focus on long-term growth. Rather than envy others' success, they concentrate on their own plan. This mindset creates emotional resilience and financial stability. He also highlights the importance of clarity. Knowing what you want and why you want it provides direction. Without a clear vision, people make impulsive decisions, chase trends, or follow the crowd. Clarity turns confusion into purpose. It helps you stay committed to your strategy, even during market downturns. Tony introduces the concept of abundance thinking versus scarcity thinking. Scarcity thinking focuses on what you lack, creates fear of loss, and encourages short-term reactions. Abundance thinking focuses on opportunities, growth, and potential. It allows you to take calculated risks, invest confidently, and remain calm during volatility. The unshakable investor embraces abundance thinking, transforming challenges into advantages. Another key principle is discipline. Wealth is built over time through consistent, smart actions. Impulse decisions, chasing fads, or reacting to daily market news destroy compounding power. Discipline ensures that your plan continues working, even when emotions tempt you to stray. It is the bridge between knowledge and results. Tony also emphasizes learning from mistakes. The unshakable investor does not fear failure. They treat setbacks as lessons, adjust their strategy, and continue moving forward. Mistakes are inevitable, but repeated panic or avoidance is optional. Your mindset determines whether failures weaken you or make you stronger. He connects mindset to goal setting. True wealth is aligned with your values and purpose. It is not just about accumulating money. It is about creating freedom, security, and impact. By defining your goals, you know what to protect, what to invest in, and what risks are worth taking. This alignment reduces stress and keeps fear in check. Finally, Tony ties this chapter to the next principle: the power of gratitude and giving. Once your mindset is strong, focusing on abundance and purpose, the next step is to understand the transformative power of gratitude and generosity. Wealth is not just for personal gain. It multiplies when used to create value for others. The next chapter explores how gratitude and giving complete the psychology of unshakable financial success, turning money into both security and meaning. Chapter 12: The Power of Gratitude and Giving. After mastering fear and developing the mindset of true wealth, Tony Robbins reveals another critical element of financial success: gratitude and giving. He explains that wealth is not just about accumulating money. It is about using your resources to create value, impact lives, and experience fulfillment. Gratitude and generosity transform money from a source of stress into a tool for empowerment and happiness. Tony begins by highlighting the science of gratitude. When you focus on what you already have, your brain releases positive chemicals that improve your mood, decision-making, and resilience. Gratitude shifts attention from fear, scarcity, and comparison to abundance and opportunity. It strengthens emotional control, which is essential for staying calm and unshakable during market volatility. He also shows that giving money has a profound effect on your own wealth mindset. When you give strategically, through charity, supporting causes, or helping others, you create a sense of purpose. This purpose reduces fear of loss because you see money not as a personal safety net, but as a tool to improve lives. It reinforces abundance thinking. There is always more to create and share. Tony stresses that giving does not mean recklessly spending or risking your security. It means integrating generosity into a disciplined financial plan. Even small contributions, when consistent, create profound personal and social impact. Giving also creates gratitude, which in turn strengthens patience, focus, and long-term thinking, qualities essential for unshakable wealth. He connects gratitude to investment decisions. An investor focused solely on greed envy, or comparison makes impulsive and emotional choices. In contrast, someone practicing gratitude and purpose sees beyond temporary market fluctuations. They invest calmly, strategically, and confidently because their decisions are guided by principles, not emotion. Tony also highlights a practical technique: visualizing the impact of your wealth. Imagine the lives you can improve, the causes you can support, and the freedom you can create for yourself and others. This visualization reinforces motivation, discipline, and a sense of abundance. Money becomes not just a goal, but a tool for meaningful action. He further explains that gratitude and giving are closely linked to resilience. When setbacks occur, a grateful and generous mindset prevents despair. It allows you to focus on what remains and how you can grow from challenges rather than fear losses. This emotional strength is what separates ordinary investors from unshakable ones. Finally, Tony connects this chapter to the next part: the Unshakable Action Plan. Once you understand the internal psychology of wealth, conquering fear, developing a disciplined mindset, and embracing gratitude and giving, it is time to translate these principles into concrete action. The next chapters will provide a step-by-step framework for creating a portfolio, managing risk, and taking control of your financial future. Psychology alone is powerful, but action is what converts knowledge into unshakable financial results. Part 4: The Unshakable Action Plan. After mastering the psychology of wealth, overcoming fear, cultivating the mindset of true wealth, and embracing gratitude and giving, Tony Robbins now moves to the final stage of building lasting financial freedom: the Unshakable Action Plan. This part is focused on translating knowledge and mindset into practical steps that anyone can follow to take control of their financial future. Tony explains that strategy without action is meaningless. All the insights, principles, and psychology discussed so far only produce results when applied consistently. The Unshakable Action Plan provides a clear roadmap for investing intelligently, managing risk, and building a resilient portfolio that can weather any market condition. He emphasizes that this section is not about complicated formulas or short-term speculation. It is about simple, actionable steps designed for long-term success. Tony distills decades of research and advice from the world's top investors into 4 core principles that form the foundation of unshakable wealth. In this part, you will learn how to create a portfolio that balances growth and protection, how to implement a practical system for managing your investments, how to make informed, disciplined decisions without being swayed by emotion, how to take control of your financial future instead of leaving it to chance or advisors who may not act in your best interest. Tony also highlights that the Unshakable Action Plan builds directly on the mindset work from the previous part. Fear, impatience, or overconfidence can ruin even the best strategies. By combining psychological mastery with disciplined action, you create the ultimate advantage in wealth building. As we move into the next chapter, the Core 4 Principles, Tony begins by revealing the foundational rules every investor must follow. These principles are simple but powerful. They provide a roadmap for making smart decisions, managing risk, and building wealth steadily over time. Understanding them is the first step in turning knowledge into results and becoming truly unshakable in every market environment. Chapter 13: The Core 4 Principles. Tony Robbins begins this chapter by introducing the Core 4 Principles, the foundation of building unshakable wealth. These principles are simple, actionable, and proven by decades of market history. They are designed to protect your money, reduce risk, and maximize growth over the long term. Understanding and applying them allows you to invest confidently, even during turbulent market conditions. The first principle is owning the best of the best. Tony emphasizes that not all investments are created equal. Invest in high-quality companies or funds with a history of consistent growth, strong fundamentals, and durable competitive advantages. By focusing on the best, you reduce the risk of failure and increase the potential for long-term returns. He explains that quality is more important than quantity. Owning a few exceptional investments is better than spreading yourself too thin. The second principle is diversification. Do not put all your eggs in one basket. Spread your investments across asset classes, sectors, and regions. Diversification reduces the impact of any single failure and stabilizes overall returns. Even if one investment underperforms, others can continue to grow, ensuring your portfolio remains resilient. Tony warns that diversification is not just about holding many assets. It is about holding assets that behave differently under different conditions. The third principle is regular rebalancing. Markets are constantly changing, and your portfolio will drift from its original allocation. Rebalancing ensures that you maintain the right balance between growth and protection. It prevents overexposure to risk and forces you to buy low and sell high in a disciplined manner. Tony explains that rebalancing is not about reacting to short-term market movements, but following a long-term plan that protects your capital while maximizing opportunity. The fourth principle is minimizing costs and taxes. Hidden fees, taxes, and unnecessary expenses quietly erode your returns over time. Tony emphasizes using low-cost funds, tax-efficient strategies, and keeping an eye on all expenses. Even a small reduction in fees or taxes, compounded over decades, can result in enormous savings. He reminds readers that these small, often overlooked details are what separate ordinary investors from unshakable ones. Tony also highlights the importance of combining these four principles with discipline and patience. The market will always experience volatility, but by sticking to these rules, you protect yourself from emotional mistakes. Fear and greed may tempt you to deviate, but the Core 4 provides a framework that keeps you grounded and focused on long-term growth. He shares examples of legendary investors who have applied these principles consistently. They survived crises, avoided panic, and steadily grew their wealth over decades. Their success was not due to luck. It was the disciplined application of timeless rules. Finally, Tony connects this chapter to the next, the ultimate bucket system. Once you understand the Core 4 principles, the next step is to implement a practical system for organizing your portfolio. The ultimate bucket system shows you how to allocate money effectively for safety, growth, and opportunity, turning strategy into actionable results. This system is the bridge between theory and execution, making your wealth truly unshakable. Chapter 14: The Ultimate Bucket System. After learning the Core 4 principles, Tony Robbins introduces the Ultimate Bucket System, a practical framework to organize your investments for safety, growth, and opportunity. This system transforms abstract strategies into actionable steps, allowing you to structure your portfolio in a way that reduces stress, manages risk, and maximizes returns. It is called the Ultimate Bucket System because it divides your money into separate, purpose-driven categories, each with its own role and strategy. The first bucket is the safety bucket. This bucket contains money you cannot afford to lose, such as funds for emergencies or short-term expenses. It is invested conservatively in low-risk assets like high-quality bonds, money market funds, or insured accounts. The goal is not growth, but protection and liquidity. Knowing that your essential funds are secure reduces fear and allows you to invest the rest of your portfolio with confidence. The second bucket is the growth bucket. This bucket is designed for long-term wealth accumulation. It contains investments in high-quality stocks, index funds, or other assets with the potential to grow steadily over decades. This portion accepts some market volatility because it is not needed immediately. The compounding effect over time allows this bucket to generate substantial wealth, and it benefits from patience and consistency. The third bucket is the opportunity bucket. This bucket is reserved for strategic opportunities such as undervalued stocks, emerging markets, or high-risk, high-reward investments. It is smaller than the other buckets and designed to take advantage of short-term market inefficiencies. The idea is to allocate a portion of your portfolio to calculated risks while protecting your core wealth in the safety and growth buckets. Tony explains that each bucket serves a psychological purpose as well. By separating your money into clear categories, you reduce emotional decision-making. You know which funds are safe, which are growing, and which are for opportunities. This clarity prevents panic selling during market dips and keeps your long-term plan on track. He also emphasizes the importance of periodic review. Over time, allocations may drift as markets move and goals change. Rebalancing ensures each bucket maintains its purpose and risk level. It also forces discipline, helping you buy low and sell high in a structured manner. Tony shares practical examples of how investors can implement the ultimate bucket system. He shows how a balanced portfolio can survive downturns while still capturing growth opportunities. Even during crises, investors with this system feel secure because their essential funds are protected, their long-term growth continues, and they have resources to take advantage of market opportunities. Finally, Tony connects this chapter to the next, taking control of your financial future. Once your buckets are defined, the next step is action. It is about taking responsibility for your money, making informed decisions, and committing to a disciplined plan. The ultimate bucket system provides structure, but true unshakable wealth comes when you actively manage and control your financial future, rather than leaving it to chance or others. Chapter 15. Taking control of your financial future. With the core 4 principles and the ultimate bucket system in place, Tony Robbins emphasizes the final step, taking control of your financial future. This chapter is about moving from knowledge and strategy to action, making your wealth intentional, protected, and unshakable. It is about realizing that your financial life is in your hands and that you can shape it with discipline, planning, and mindset. Tony begins by stressing the importance of personal responsibility. Too many people rely solely on advisors, market predictions, or luck to guide their financial decisions. While guidance can be helpful, leaving your future entirely in someone else's hands is risky. Unshakable investors take ownership. They understand their goals, define their strategy, and make decisions based on principles, not fear or hearsay. He highlights that clarity and planning are essential. You must know what you want your money to achieve: retirement, freedom, family security, or legacy. Clear goals allow you to allocate resources effectively, set realistic timelines, and measure progress. Without this clarity, even disciplined strategies can fall short. Tony also emphasizes education and continuous learning. Markets evolve, financial products change, and personal circumstances shift. Staying informed enables you to adapt while sticking to your principles. The unshakable investor is proactive, not reactive. They read, ask questions, and understand the mechanics of their investments. Knowledge transforms uncertainty into opportunity and fear into confidence. Another critical point is discipline and consistency. Wealth is built over time, not overnight. Small, consistent actions, regular contributions, strategic rebalancing, and long-term thinking compound into extraordinary results. Impatience, speculation, or emotional reactions are the enemies of financial growth. By adhering to your plan, you harness the power of compounding while avoiding destructive behaviors. Tony addresses the role of advisors and mentors. Seek guidance from fiduciaries who act in your best interest, but never abdicate responsibility entirely. Your plan should reflect your goals, risk tolerance, and values, not someone else's agenda. Advisors are tools, not substitutes for ownership of your financial future. He also highlights the importance of mindset and emotional control. Markets will fluctuate, crises will occur, and uncertainty is inevitable. Fear, greed, and impatience can destroy results faster than any market crash. By controlling your emotions, practicing gratitude, and focusing on long-term growth, you remain unshakable even in turbulent times. Finally, Tony ties this chapter to the conclusion. Taking control of your financial future is the culmination of everything in the book: rules, strategies, mindset, and psychology. It empowers you to act with confidence, manage risk effectively, and create a life of freedom and security. The next section, The Unshakable Investor, brings these lessons together, showing how to live as an investor who is calm, prepared, and ready to thrive in any market environment. It is not just about wealth. It is about becoming unshakable in life, finance, and purpose. Conclusion: The Unshakable Investor. Tony Robbins concludes Unshakeable by bringing together all the lessons, principles, and strategies into the vision of the unshakable investor. This investor is calm in the face of market volatility, disciplined in decision-making, and committed to long-term growth. Being unshakable is not about avoiding risk, avoiding loss, or controlling the market. It is about controlling yourself, your mindset, and your actions. He emphasizes that the unshakable investor approaches money with clarity and purpose. They know their goals, their risk tolerance, and the plan to achieve financial freedom. They have built portfolios based on the core 4 principles, organized money with the ultimate bucket system, and mastered the psychology of wealth. They are prepared, informed, and confident. Tony also highlights resilience as a key trait. Markets will always experience downturns, crashes, and uncertainty. The unshakable investor does not panic. They have strategies in place to protect their wealth, patience to stay invested in growth, and courage to take advantage of opportunities when others are fearful. Resilience allows them to see volatility not as a threat, but as a natural part of the journey. Another hallmark is emotional discipline. Fear, greed, envy, and impatience are natural, but unshakable investors do not let these emotions dictate their decisions. They make choices based on principles, logic, and long-term strategy. This mindset prevents rash decisions that could destroy wealth and ensures consistent, steady progress toward financial goals. Tony also reiterates the importance of giving and gratitude. Wealth is not only for personal gain. It is a tool to create impact, security, and fulfillment. By practicing generosity and maintaining a mindset of abundance, investors enhance their emotional resilience and align their wealth with purpose. This transforms money from a source of stress into a source of freedom, joy, and meaning. He reminds readers that action is the ultimate differentiator. Knowledge alone is not enough. The unshakable investor takes consistent, disciplined steps, allocating wisely, rebalancing strategically, and staying committed to long-term goals. This combination of knowledge, mindset, and action makes wealth truly unshakable. Finally, Tony encourages every reader to adopt these principles in their own life. Start with clarity, master your emotions, protect your money, take calculated risks, and give generously. By doing so, you not only secure your financial future, but also live a life of freedom, confidence, and purpose. The unshakable investor is not a mythical figure. They are anyone willing to commit to principles, mindset, and disciplined action. The acknowledgments and appendix provide additional tools, resources, and guidance to implement these strategies, ensuring that every reader has the practical means to become unshakable in finance and life. With this foundation, you are ready to face any market, any crisis, and any challenge with calm confidence, knowing that true wealth is built not just in dollars, but in mindset, preparation, and purposeful action. If you found this summary helpful and want more insights from best-selling books in simple, actionable English, make sure to subscribe now. Hit the subscribe button so you never miss a breakdown that can help you master money, mindset, and success. Join our community and take the next step toward becoming unshakable in finance and life.